Thank you very much. And good afternoon, everyone, and a warm welcome to my esteemed panelists. Okay. Please feel free. It's all about hospitality, isn't it? Okay, right. We've had the names introduced, but I would sort of like to kick off with a little profile. I'm told we have 40 minutes, and we will do our best to contain within 40 minutes. It's also important that we get some audience participation. My God, the lights here just feels like I'm hot on stage. Excuse me if I do this all of the time. Right, so we would also welcome some participation from the audience, and therefore we would allow some Q&A as we proceed. So Lucy, you've been introduced. You're currently the Director, Tenant Representation, Leasing and Advisory with JLL, and in your old hat with Standard Chartered Bank. And Khalil, who I met this afternoon, very interesting man, multilingual and also multicultural. He's the Director, Asset Management at Casada Capital Management. And of course, last but not the least, Maximo Somen, I got it right. Somen is Kofisi's Product Director. He's done various things, food and beverage, art program, innovation, communication, all the works. I refer it as a blending hospitality expert. Right, I'm just going to move on straight into our questions, and I'd like to kick off with you, Khalil. So let's have your views on the rise and fall of flexible office spaces. That's really our theme and our topic. The initial boom in flexible space slowed post-COVID due to cost sensitivities and consolidation. So, but how can flex space operators now begin to adapt to global occupier needs and increase the uptake of space?
All right, thanks, Anne, for the introduction. So maybe we can start with the market and global trends on the co-working and the flex office. Globally, the co-working and flex office represent 15% of the office market as stock, right? And we have seen, like post-COVID, an amazing increase with a compounded growth of more than 15% globally. The good news is in Africa we are seeing the same thing, and in Kenya too. On the continent, the flex office and co-working stands for 5% of the office market. But if you put it in perspective, pre-COVID it was 0.5%, below 1%. So we are experiencing more than 20% increase per year since COVID on the flex office. So I think the flex office is just like here to stay, and we see the increase of the shares. Flex office is an industry, and we need now to look at it as what makes flex office successful, right? And I think part of it is a service. We call it serviced office, but I think it's really important that we understand that the co-working can't be, or except if you are a Tier 2 player, but can't be only like a Wi-Fi chair or something. We really need to get out of this. And I'm talking to everyone because I feel like from different stakeholders in the office market, the co-working is still seen as a short-term solution and so on. The reality is like your Meta, your Google, your big techie are using those services. The pharmaceutical and flex office actually has gained a lot of shares across the industries, right? So yeah, that's in terms of market and how the operator are adapting to the global occupier. There is the global occupier, and we will talk about it, but I want really also to insist on the local players, right? And if you want to make your business sustainable, you need to talk to the locals. Here in the Pullman and Mercure, we have a co-working wardrobe. 60% of our clients are local companies. If there is a COVID, another crisis, we know those guys will still remain with us, right? We will not see anyone disappearing. So, how to adapt flexibility, long-term contract, adapting to the design. I think it's very important that you understand your client needs. Most of the operators now, they have their own design team, customer experience team, and this is where I think co-working is closing the gap with hospitality. Most of the players today are credible enough to really articulate a proper office value proposition. Flexibility, but also like most of it, we know that the operator take the risk of the capex, and it's a big help for a lot of global players or clients. You just plug and play, and that's it.
Okay, that's quite a lot in there. You know, you've talked about some of the data around the move to almost 5%, 20%. We're still now in flex spaces. You've talked about the local players. You know, yes, we've got the global occupier requirements, but also the local needs. Would you like to add anything to that, Lucy first, and then Mark, possibly?
Maybe just to emphasize that, to Khalil's point, flexibility is key, and we're seeing that sort of advise a lot of what is happening with the flexi or the serviced office operators. And that goes for all occupiers, be they in traditional leases or with the serviced operators.
Sure. Thank you for that. Mark?
Yes, thanks, Anne. To add what Khalil said, I think we have to think about why the demand is there. And the demand is there because people's needs are changing. People's needs have changed. The worker wants more. They want an experience. They want comfort. They want to have a nice cup of coffee. So I think, you know, there's many of us providers that are really looking at that. And I think with Cofisi, we talk a lot about hotelification. And it's not just offering the amenities that a hotel provides, as you guys do. It's also creating this office culture that's about nurturing, about support. It's about giving people what they want. So I think that's an important point. When people come to a workspace, they want to feel more than it's just the place that I come to do my work. But you know, at Cofisi Square, we opened 4 years ago a lovely restaurant on the roof, and there's an atrium that can have a 250-person event, and we offer room service to your desk. So all these things that kind of hope to get people to stay working, but also feel more productive.
Sure. So quality amenities, effectively. And I think what I picked from Lucy was really the partnership with the landlords and the occupiers in enhancing that we get a key service orientation. So the word on the street, again to you, Khalil, the word on the street is that flex operators must create enterprise-ready solutions that go beyond co-working. So how can flex occupiers adapt a global occupier needs and adapt to global occupier needs and increase the uptake of space? And I'd like us to think now and obviously 3 to 5 year term. Thanks.
Yeah, no, absolutely. So as I said, the market, I mean, the growth is between 15 and 20% on the flex office. So there is opportunity. I can emphasize on two things, but one thing will be, if you look at the global occupiers, we also need to look at their habits and how they manage their own office. And you will find out that a lot of companies actually inject a lot of the co-working expertise in their own HQs, right? Access control, tech-enabled things, smart systems, building management systems. I think if you want to attract, and we were talking a lot about ESG today and so on, if you want to attract those global occupiers, you need to be spot on this, not only for financing reasons, and I'm also talking on the investment side, but also like for the operational side. So we have seen most of the international players just adapting to that. If you go to Paris, to London, those are not even questions. They are there, right? They are good practices. The design is important, I would say. The circulation, I think, is also very, very important. But really, like, I want to really emphasize the fact that the co-working, and to the point of Mark, it's not only like you are providing an office, it's becoming like adapting to the work experience and the work habits. And I think that's where global players or global operator or African co-working operator understand our habits.
So perhaps extended that question, aligned to what Khalil has just said. What are your views, Lucy? Will flex space operators continue to lead in the uptake of space over the next 3 to 5 years? Do you see that happening?
I think I'd say yes, but also say that I think, and Khalil has alluded to it, while the flexi office operators may lead in the remodeling and repurposing of what has become the office of today, we are seeing even traditional office occupiers repurposing and remodeling their spaces, so the office becomes much more of a collaboration space and a service, even where they are in a traditional lease. So while the flexi operators may lead in that I think they were more nimble to adopt, but we have seen that all other occupiers, especially in the post-COVID period, have started to relook at the office. Is the office that functional space that they always reported to do some work, or is it now a point of collaboration, one that then offers beyond just the desk? So yes and no, and that they will lead, but then the adaptation from everybody else is following the same pattern. You may walk into an office, a traditional lease occupier, and the office mirrors what the flexi operators are doing. So
I completely agree with you. I mean, I think you'll find most of the corporates, in every opportunity they're having to revamp or refurbish their offices, they're thinking in that direction. Anything else to add? Would you like to, Mark?
I would just say I love the word collaboration. I think people want to come to work and collaborate, and whether it's in the center or it's in other centers that you have. So, I mean, Wojo, as a Wojo member, you can go in many other places. As a Kofisi member, you know, we have 6 centers in Nairobi, we have Dar, we have Lagos, we have Casablanca, we have many in South Africa and Mauritius. And I think, you know, having that opportunity not just to work from my hometown, but if I'm on business in Casablanca or coming up in Kigali, I think it kind of gives people that, again, that productivity to be able to collaborate with other people in those spaces.
Okay, thank you very much. That was very helpful. Back to you, Khalil. So turning now to regional trends and fit-out costs. Let's think around that. What are some of the similarities and differences of the regional real estate landscape? Just thinking around fit-out costs in particular.
So, I mean, it's not a secret for everyone that capex costs have increased across the real estate for many reasons. Pressure on the supply chain, and I think in the continent we are very sensitive to the global shocks, right? Because we don't have enough production and transformation in the continent. We are still we rely a lot on the importations. At Casada, we do yes, flex office co-working, but we do hospitality and hotels, and I can tell you that something we have noticed across the continent from east to west is a surge in the fit-out cost, right? But having said that, maybe on the bright side, and here I'm really like talking as investors and trying to enable a little bit this.
Yes.
I think the returns on what we call a mixed use are very interesting, right? So you really need to assess your increase of capex costs and still have your value proposition product in mind. It may make the returns. If I give you an example, like a traditional co-working, if you look at your revenue per square meter, right? We can see, we have the data that basically when you reach an 80% or 85% in the co-working, you can yield 2 to 3 times versus the traditional lease. So the bet on the capex and the increase can be properly compensated, and you can get the returns. Then remain the financing, right? And that's why I think all the discussion I heard this morning and this afternoon is very interesting, how to bring the private equity and DFI and so on. They need to see within the commercial real estate a flex office a little bit as an asset class, right? And compare it to the rest of the traditional market.
Sure.
Right?
Absolutely spot on. You know, converting flex office as an asset class in itself, in its own right, and beginning to provide the indices around that.
There is a win-win on this. There is your revenue per square meter that we need to really look at it, and I'm sorry to be boring on that, but it's very important, especially if we look at hospitality, where we look at revenue per room. you need to look at your asset a little bit differently. And when you look at the revenue per square meter, this is when somehow you become a little bit more entrepreneurial on this. Meanwhile, while you look at this, you need to bring the right value proposition. And the right value proposition is creating the ecosystem for your customers. They can go from the hotel to the co-working to the restaurant and anything. That's where the lifestyle component comes from. That lifestyle component has a cost. Clearly.
Absolutely agree with you. Any thoughts, Lucy, to add?
I'm not too sure that it is applicable across the region, but to our fit-out costs for the offices will definitely be driven by what you have designed into the space. When you look at the very basic office that was just a functional space, you would be looking at anything about $1,000 a square meter. But is that for what is fit for purpose? And that's in Kenya. When you go across to Uganda, Tanzania, Rwanda, it's possibly going to be 30% higher than that. But is that what it's going to cost a typical occupier to fit their offices? Maybe not, because you are trying to do a space that's beyond just the function of office. So you're possibly looking in the region of 1,500, 1,800. And that the rates I use anaerobi at maybe 30% for the rest of the region.
That's very insightful, considering the local market in terms of the cost indices. Thank you, Mark.
I just want to make one comment about, your question was also about regional trends. And I think, obviously there's differences between Kenya, between Nairobi and Lagos or Abuja or Kigali. But I think what the customer demands is often very similar. You know, they do want this, they do want the hospitality, they do want great food, they do want affordable prices. And I think it's important for brands that are expanding to take advantage, to be very conscious of the local flavor. You know, when I was with Soho House, this members club company, any Soho House you walk into, you know you're in a Soho House, but there's a flavor in Mumbai, whether it's the art or whether it's the food, that's different from New York or LA or somewhere like that. So I think, you know, picking up the local feeling and spirit, but understanding that the regional trends are often very similar.
Sure. I think what I'm hearing from the three of you actually is there's a real importance to focus on some of the local nuances in spite of the regional expectations in achieving a win-win, essentially. Thank you. Right, over to you, Lucy. I'm just going to staying along with some of the questions we've asked. The initial boom in flexible space slowed post-COVID due to the cost sensitivities, consolidation, etc. Is it correct to say that there's a likelihood of a full return to work now that we've all settled, we've all evolved into flex working spaces? What are your thoughts?
I'm not sure what to make of the commentary, full return to work, because in a sense we've returned to work. What we may not return to is our former ways of working.
Yes.
So I think in a JLL future of work study that we did at the end of 2024, and talking to largely the corporate real estate decision makers, 56% expected that we will return to office maybe 3-4 days a week. And a smaller percentage, about 44%, is more to the lesser 2-3 days a week. But all of them, 72% of the respondents, at least, which is what were agreed on one principle: the office is back. We are back to the office. How we use the office is what has changed. We have the proponents of full back to work. We have the proponents of some hybrid, but the essence of is the office back? It is. Will we see a return to, when you say pre-COVID, to where it's full occupancy?
Correct.
But yes, full occupancy in a remodeled office. So even assuming the corporates that have said 3 days a week, everybody must be in, are they working the way they worked pre-COVID? No. They are working in that they are back to an office space, but of a very different nature. So I think in a long and short way, the answer is we are back to the office. The office is largely still functional. It's not back in the pre-COVID style, but it is back as a workspace.
Sure. Thank you. Would you like to add any comments there?
Yeah, it's such a bizarre concept for me because I used to run hotels and restaurants, and the idea of working from home, like, how do you do that? And I have 3 daughters who wake up and they're like, I think I'm going to work from home today. I'm like, what are you talking about? Like, how does that even work? But it's amazing, actually. Sometimes I like working from home in my pajamas. So I think, in answer to your question, I think more and more we're going to be coming back to the workspace, but I can't see a total mandate of everybody needs to be in the office. And I think for us it's great that, sometimes there's 70% of client A is in the office, and then 50% are there, and it makes it a better option for the company as well, who's got some shared workspaces.
Sure. Thank you. So I'm going to bring it back home to. Oh, sorry. Would you like to add to that?
Yeah, quickly. The major trend is back to work,
Yes.
in US at least, and I think we will experience the same thing. But I just want to say something about because when you look at flex office, it seems to be more like an opportunistic thing, what we use while it's in crisis and so on. A lot of companies, and you are talking about the global occupiers, but also local companies, they have included flex office in their strategy, real estate strategy. The HQ, you take Johannesburg, Sandton, 50% vacancy rate, HQs, right? And the strategy is okay, we can call back people in the HQ, but also we can also bring offices closer to home, and this is where flex office and co-working can play a role, right? Now, when you have an HQ of 10, 15 floors, 50% empty, this is when tech-enabled solution comes. Building management system, gain on your OPEX, don't be lazy. And I think that's why I'm saying the flex office, it's not only a solution, and I really want to say this, it's not a short-term solution. And I think a lot of stakeholders in this industry believe it's just okay, short-term. Yeah, no, it's part of the strategy, and it's coming. And this is what we are noticing in the continent and in Kenya.
I thank you very much for sort of reinforcing that comment, because with those levels of vacancy, there has to be a longer-term solution. I think that's the reality that we all face. I'm coming back to you, Lucy. Now I'm looking now, homegrown Kenya, recent landmark ruling by the Supreme Court of Kenya in 6 December 2024. And how do you think that ruling has influenced the relationships between landlords and occupiers?
I must
be sure and be careful. So I think I'll help you look.
I look into the room and ask the lawyers in the room to appreciate that this is a conversation that my feedback to you is based on what occupiers and landlords may be telling to one another. It's not an attempt at interpreting this from a legal perspective or trying to translate what the court said. But I think the 3 key things that came out of that ruling, and that is the Kwanza Estates versus JKU card, for those who may have looked at it. The Supreme Court decided or has reminded us that what industry has talked about for so many years, we do need to relook at the framework of our commercial law, or commercial lease law. There is a 1965 Act. Because while it attempted to lock a tenant in for a certain fixed period, 3 key things came out of this ruling. One is that it's unconscionable for a landlord to try and hold a tenant in a premises beyond the term for which they can pay, or if they have expressed intention to exit. But it also says something to the tenant. The landlord still retains a right to sue you for any losses that they will incur because of your breach of the contract, because terminating mid-term is really wasn't the spirit of the agreement. But both parties are then charged with the responsibility of mitigating losses. The tenant to pay to when they exit, the landlord to try as much as possible to fill up the space. There was previous legislation by lower courts that had sort of started to allude to this direction, where tenants or landlords could not do a double benefit, where I release you from a 5-year lease, but oblige you to pay me for the remainder of the term, while on the other side, I may even still fill up the space. That had started to shift from lower legislation, but now that it has come from the court that it has come from, I'm sure it's going to make practitioners in the room our lives a little bit easier, because what, for instance, we have done over the years is we ended up with a market practice solution. So a landlord requiring a tenant to sign a 5-year lease is a factor of law. So however business-minded that landlord is, he has to comply with the law. A lot of the global occupiers come from markets where leases should not be anything more than 3 years. So the practice of deeds of surrender, the practice of comfort letters that were executed, and largely maybe a massive, possibly 98%, 99% of the landlords will accept this. What this ruling will possibly do is address the other 1-2% that have been reluctant. But what the tenants and what we are advising the tenants in all instances is, please remember, a landlord still retains the right to sue you for what they may consider their loss. So, as much as possible, let it be a negotiated exit. Let it be a negotiated surrender, as opposed to, because one of you still has to go to court if you intend to break it purely on the strength of what you have read to have been that Supreme Court ruling. But I think for many of the practitioners in the room, they will agree that because the Archaic Act was one that no one was motivated enough to amend, the market shifted and found our own solutions of how we have addressed that issue. And I suspect that now from this, because there's also a call out for the framework to be relooked at, someone, and maybe to be the occupier advisor such as ourselves, should drive the amendment or what happens next. And then the second point, just before I move on, that has also now reinforced a lot of global occupiers' mindset in terms of when I'm looking flexibility, because in the list of things that a global occupier will give you when you're looking for spaces for them, a key one is always flexibility. So not only have we had the court speak to what that looks like, but also market has responded to it.
That's what I was waiting to add to here. Most certainly the market will now need to respond, and it remains to be seen what the new leases will be like going forward. Did you want to add something?
No, I think meanwhile, I mean, we as at Casada, we have 5 floors of offices, 2 co-working, 3 traditional tenant, and we see the mix quite de-risking for us. Yeah. The nature of the contract we sign in Flex Office is service agreement, so I would say what the court say, but it's still like very flexible, right?
Yeah, absolutely.
So we feel like we were looking at it and we feel quite de-risk. Of course, we have also high level and high profile tenants, so we are with a good relationship, but the two floors of co-working help us to de-risk that side, for sure.
Interesting. Okay, conscious of time, I'm going to move on to you, Mark. Lifestyle is increasingly becoming part of the office experience. We've heard a lot of it that's been said today. How is Kofisi integrating lifestyle amenities into its spaces, and why do you think that this matters, to modern occupiers? Your thoughts?
Yeah, thanks, Anne. So I talked a little bit earlier about hotelification and about the amenities that you find in a hotel that you find with your shared workspace provider. So I think that's really important. Having the food and beverage is a huge part of it. I was originally brought on to kind of layer hospitality over everything we do at Kofisi. Our next center that opens is Kofisi Kaskazi here in Westlands, and we're going to have a public restaurant. We're going to have a cinema. We're going to have bedrooms. Our first bedrooms will be coming. So these wellness amenities, a wellness space, physical and mental wellness. So I think all of those are an important addition, and that's sort of following global trends at what people are looking for. And then the last thing that I would add is a sort of feeling of a members club. We were talking about it at lunch today,
yes.
Like this sense of belonging that you go to your favorite restaurant or you go to your favorite hotel, and you go there because they remember you and they know your name, and it's so this sense of these are my people, this is where I feel comfortable, but it's my workspace, but I still feel looked after, and they know my name, and they, as I walk in, my decaf latte is on the table because they know they're treating me like a member, and we do programming, and we have perks for members, and so sort of a whole greater offering. And I think these are, we're seeing this is a global trend, and we're bringing it here as well.
It's very interesting, from a personal view. I'm sitting and I'm thinking, I wake up at 9 o'clock, I decide to go into a Occupier office, and I probably won't leave until 9 p.m. or 12 midnight, because everything I need is there. And I may decide to stay the night because you've got hospitality. Is that the direction we're moving? I've just sort of, as you spoke, I just thought through, is this where we're headed?
You're very welcome, Anne. Come over.
Not sure. Right. Okay, that's very interesting. Just before I think I want to pause at this stage and take some questions from the audience. If we have anybody has a thought, a question, a comment. Okay, looks like we're all just almost beginning to embrace the conversation. Let me just move on. In terms of will flex space operators continue to lead in the uptake of space in the next 3 to 5 years? What are your thoughts? And then Mark can answer that.
Just on the lifestyle, I think it's and then I can jump in. I think it's in the hospitality we see a lot of owners moving to lifestyle for a reason. Your revenue, again, per square meter, are just another story, and but it comes at also a great execution, and it's not that easy, I would say. And I love the fact that some players, even in the co-working, are trying to do that. So yeah, lifestyle is a total different trend in the hospitality. Very efficient in terms of returns, but the execution has to be like spot on, really, and that's why you see big brands there. On the 3-5 years, I think last time, I feel like I come every year saying the same thing since 2018, so 6-7 years now. I still believe that the flex office will keep on increasing. The shares are there. Owners are also coming to the party. I think a good wake-up call, and this is from Kenya to Nigeria and north to south. If you want to avoid vacancy rate, you need to be a little bit more flexible and creative. I think having a mixed use with a flex office will put your assets in the radar, and you can create the right flex. So I believe people are more and more serious about it, and they are serious because operators are doing also the job. So I'm quite positive that that trend will remain.
Interesting. But perhaps I want to pick you up on this before I go to Mark. What about enterprise solutions within the flex space? What are your thoughts around that?
So enterprise solution was the fashion word 2 years ago when co-working was trying to sell itself, and now it's lifestyle, right? So enterprise solution, I think we evolved clearly. Okay. You have people signing 5-year service agreements.
Yes.
It's an enterprise solution, right? So I think it's there. Okay. This is the message that I want also to send to some stakeholders that sometimes doesn't see it as an enterprise solution. It is already there.
That's what it is. Okay, so Mark, Mark. Then I'll probably move on to Lucy. But in responding to that question, I'd like you to think around PropTech as part of the offerings in flex space.
Yeah, so it's a key component. I think, knowing when people are coming in, the ease of coming in, you work till 9 o'clock at night or midnight, having the tech to enable that. And I think, even in LA, where I spend half my life, I go into some workspaces and it takes 7 minutes to set up the AV. Like, it's so unacceptable. Like, good internet, easy AV to set up. So I think the technology is a key piece. On the hospitality side, having the ability to seamlessly order a coffee to your desk or a fish and chips to your desk, something like that is really important. We're going to see more and more of it.
Brilliant. Okay. Right, we're coming to the end of the conversations. Just your closing shots. So please share just some success stories or thought leadership ideas or notable achievements. And they're looking very anxious. I'll tell you why they're looking anxious. I told them I'll give them a trick question here. It's not a trick question. Lucy, I do know that you're very passionate around the intersection of technology and corporate real estate, and particularly around digital infrastructure. Just in 1 minute, you've got the floor, your elevator speech.
Miss Anne hasn't done what she had threatened to do. She had threatened to ask us to dance.
I had to make sure they were up for this. Okay, go on.
So what you ask is relatively easy. Now, I think two things. Technology as an enabler in the office space, and especially now that we are talking about hybrid and or other forms of working, continues to be one of the elements by which, or rather the weighting to it and its availability in any location, any building, the weighting for that to be selected as a space continues to increase in 3 ways. Will the occupier be able to access it? And access it, there's a point when if you said we have XYZ as operators, it was enough. Now they want to know that it is available from multiple feeders, not operators, so that it's almost always available. And then for investors, how do you use it to help you manage the building and the space? BMS systems or others, so that space continues to be what you envisaged it to be. And I think in a nutshell that it should be something both in managers of buildings and investors' mind.
So sustainable buildings. Okay, over to you, Khalil. Reflecting on your multicultural activities and your bilingual, I know you speak French, English and Arabic. Am I correct? Any more languages? Right, okay, that's plenty enough. How has that influenced the launching of, I know you were part of also the first Hyde Hotel. How did all of that influence that success story? I know you didn't see it coming.
Yeah. No, I think what I mean, we move a lot around the continent, and we also spend some time in Middle East and also Europe, and for me, I don't know if it's a success story, but clearly I feel like on the continent and in Kenya we are closing some gaps. We are not only copy pasting. I think there is a real understanding of probably where the value proposition is evolving. But yeah, I mean, I don't like to use the word like adopters, because it makes a little bit the continent like we don't know where to go, and we're just like followers. But I would say the rise in having a good service, not anymore like you pay the price for something. I think there is something that's happening on the customer side, and we have a duty to and from operator to investors, we have the duty to respond to that. There is a big opportunity. So yeah, I mean, I don't know if it's multicultural, multi-language, but it's just like be aware that the gap is slowly but surely closed, and it remains a lot of opportunities around, for sure.
Sure, thanks. And Mark, Kofisi, they've been listed on the UK Financial Times as Africa's fastest growing company. Am I correct?
Yes.
Right. What's your role in all of that? 1 minute.
I'm a very small cog in that wheel, but I think I'd like to answer in terms of leadership. And I think there's amazing leadership at Kofisi and in our whole industry, right? But I think it's the leadership that pushes us to expand, to be great employers. And I want to end with one thing that is close to my heart and close to our heart at Kofisi, that CSR and sustainability needs to be a cornerstone of every business. We just hired an art manager. The majority of our art comes from this organization called Uwezo, which is an amazing organization in Kibera. There's an amazing organization called Little Lions in Kibera. We don't work with them, but every company should have a Little Lions, should have an Aweza, should have somebody else that they're doing something with, that doesn't just set them aside from other people, but it makes the team feel like we're really doing something good.
Being in the heart, I think is where you're going there. On that note, I'd like to say a big thank you to my very insightful, informative, innovative, interactive panelists. Thank you to you all, audience.